We are going to have these BDA classes every day of this week from today, Monday, up to when? Saturday, 2 p.m. to 4 p.m., like that. And then what is my content? The content will be, in this case here, those things. I'm so sure you've tackled quite a lot with Mwalimu Mondi, quite a lot. But now this time around, I would want us to focus on some key areas that may throw you under the bus. Remember, BDA is not all about like lock this cell, no. You'll be surprised even without knowing those things of locking and whatever, you should be able to pass this BDA, especially if you are very good in this financial reporting stuff. You are very good in management accounting stuff. You can easily prepare a flexible budget, get variances. You can easily, in this case here, for example, if you recall this management accounting, the break-even points, etc., right? We have financial management. So for example, can you do WACC, right? WACC in Excel without mambo mengi ati umefix nini, can I do WACC in Excel? If I'm given, like, for example, a balance sheet, an income statement, 2-year, and then someone tells me to extend this to, say, year 5. So forecasting 3 years ahead, using some assumptions, am I able to do that? So basically, I'll be looking at the technical areas, and then we shall also be doing something, if we agree, even if it's 30 minutes every day at night. 30 minutes every day at night, to look at the theory, multiple choice questions. Is a theory, so you can easily get those out of 40. You should be able to get more than 20. They're not very easy, but you should be able to get more than 20. So that is my program. So and today, I would want us to start with something very easy. Something very easy. I would want us to start with, I'm looking at the complications that these guys can bring to you. The complications that they can bring to you, these guys can easily give you a cash flow statement, but where they want you to analyze a cash flow for a group of companies, what we call group cash flows, where a subsidiary is bought or a subsidiary is disposed in between the year, and you're doing all those computations, goodwill, etc., using Excel. All right. So is it a challenge you guys are willing that we dive into it this afternoon? We are now 50-something, great. 50-something, great. So are we ready for group consolidation? If you look at your syllabus, they want us to cover group consolidation, but they're not telling us to which level. So I'm trying in this case here to be the devil's advocate, and assuming that if these guys here complicate this thing a little bit, if you look at your syllabus, group consolidation is there, right? If they complicate it a little bit, how shall we be able to really move forward? And remember, if you looked at the marking scheme that I gave to you, these guys are very fair because they are marking entries. Like year 1, there is a figure which is correct. They mark. So it's about many entries which are correct, which will really, in this case here, help us. So that if they are willing to take up the challenge, here I am. I'll be able to display some question here. We tackle it the normal way. So from today, you'll not hear me talking about flex this, fix this. No. We're not using that really jargon over Excel. No. You can see Lilian Achieng already, she doesn't like group consolidation, which informs something very nice here that Mwalimu, if you're doing this, then you would rather introduce this from the very basics. Introduce this from the very basics then. No worries at all. So I will come, ladies and gentlemen, here and then get a very good question of group consolidation. Group consolidation. This is very easy, trust you me. Group consolidation. Group consolidation. Very easy. Great. So then here we are. Okay. Great. So I've sent you the link where you'll be able to get additional information regarding group consolidation. And I remember I have this video. I must have even sent this video to you. So I simply want us to do this question here. It reads, on 1st January 2021, Singapore company paid $90,000 for a controlling interest of 80% in Marina Bay Company's equity when the retained earnings of Marina Bay Company was $25,000. The summarized statement of financial position as at 31st December 2022 are as follows. So they've given us the investment in Marina Bay, Singapore, that bought Marina Bay, $90,000. They have property, plant, and equipment, current assets, etc., equity shares, etc. So anasema at the date of acquisition, the fair value of the NCI of Marina Bay Company was measured at $20,000. For consolidation purposes, at the date of acquisition, the fair value of the non-depreciable land of Marina Bay Company exceeded its carrying value by $25,000. Marina Bay Company has not incorporated this fair value adjustment into its individual financial statements. At the reporting date, Singapore company owed $5,000 by Marina Bay Company. So they want me to do something very simple, prepare the consolidated statement of financial position for Singapore Group as at 31st December 2022, end of the year. For those of you who attempted the BDA exams last semester, you'll bear witness with me that that paper wasn't that hard. I spelled the calculations. But where most students messed up totally is they were spending a lot of time, more than the given time per question. So they get like a student taking like an hour, 1.5 hours doing one question alone. No. Like now this one, the maximum time for doing this question should be 40 minutes. So then let's see how far will we be able to go with this question in 40 minutes. Remember, everything you write in Excel there will be given a tick there. So then how far shall we be able to go? So if I'm given this kind of a question, if it's a group question, where do I start from? So ladies and gentlemen, for me here, what I will do, I will come straight away and just mark my group structure. I will mark my group structure. So I have a company called Singapore, which in this case here has bought a company called Marina Bay, and they have bought 90%. They have bought 90% of the shares of Marina Bay. So what do you know about 90% vis-a-vis the threshold? Remember, the threshold here is 50%. Once you buy more than 50% of the shares of a company, then this company, now that you own you own a controlling interest, more than 50% basically means that this company is yours. You're the one who is making all the decisions regarding what here, this company. Then this company becomes your subsidiary. So it means that Marina Bay is what here is a subsidiary of Singapore. Of course, in Excel, you'll not be able to draw this very easily, unless you're very good in drawings, but it doesn't matter. Even if you just go there and mention in Excel, you type very fast. That since this 90% is more than 50%, it means that Marina Bay is a subsidiary of Singapore. Remember, any company that you own, in this case here, a huge bit of it, then that company will be called what here will be called your subsidiary. If you can remember, we have like an associate, subsidiary. Those are the major ones, associate and subsidiary. If you remember, subsidiary is anything that is more than 50% all the way to 100%. If you own more than 50% all the way to 100%, then we call that one what here a subsidiary. And anything that falls in between here, 20%, but less than 50%, then this one here we call it an associate. 20% to 50%, less than 50%. We call it an associate. And then we have here a joint venture. A joint venture is exactly 50%. Mr. From Witenga joint venture, the Mr. 50%. But remember that associates and joint ventures, we normally account for them in the same way. We normally call them, or rather we normally call this the equity method. So you're saying that associate and joint ventures are normally accounted for in the same way using equity method as provided in IAS 28. In IAS 28, you'll be able to understand very well what you're required to basically master here is this concept of what yes anasana, your subsidiary. So in this case here, we are in agreement that Marina Bay, because we happen to be having 90%, where does 90% fall? Here, in between here. So it means that Marina Bay is a subsidiary. Marina Bay is a subsidiary. Great. So then if you allow me, we have been able to see that Marina Bay is our subsidiary. Marina Bay is our subsidiary. Now, listen to me very well. Once you have known you have a subsidiary, then what you're going to do is to understand the net assets of your company. You understand the net assets of your subsidiary. Understand the net assets of the subsidiary. So come and give us here the net assets of the subsidiary. Because you're acquiring a new company called a subsidiary. So there is no way you can acquire a company without really knowing how their assets look like. Are they very old? How do they look like? And then when we talk of net assets always we are looking at the equity instruments. Net assets, we are looking at the equity instruments. So when you talk of equity instruments, you will remember your balance sheet, equity instruments, what do we have there? Equity instruments, we have share capital, we have share premium, all right? We have retained earnings, we have fair value adjustments or revaluations like that. So equity instruments, we are saying we have, you can just write there, we have here the share capital, the ordinary share capital. We have here the share premium. We have in this case here the retained earnings. And then we have in this case here what we call the revaluations or the fair value adjustment into bracket like this. And then we shall be having what we call depreciation of fair value adjustment. Those four things. Listen, before you start writing, we shall get these net assets at acquisition and at reporting. At acquisition and at reporting. Please allow me to post this before you start writing. Before you start writing, please allow me. Kevin, I thought the controlling interest is 80%. Where are we getting 90%? In the question, what is the ownership? What is the ownership given here? Kevin, thank you so much. I must be very stupid this afternoon after having taken ugali and fish. It is 80%, not 90%. It is 80%. Thank you very much, Kevin, for bringing that out. And please feel free to bring out these things. Don't fear anything. Like now here I was wrong and it's only Kevin who has seen it. We are experts, all of us here. And as I've told you, you don't have to even understand everything. It's about like which entries are correct. Now, so in this case here, please correct that one that it is 80%, not 90%. But still 80%, Kevin, is higher than the threshold of 50%. So it means still that Marina Bay is our subsidiary. Thank you very much. Now, so share capital, share premium, retained earnings, fair value adjustments, and then we have depreciation or fair value adjustments. Great. Now let's get back here. Let's get back here. Let's get back here. So now we are here. Now here, ladies and gentlemen, what are they telling us here? Let's see. Look at Marina Bay, your subsidiary. Marina Bay, your subsidiary. Please go to the equity area. So like now I can see the equity shares. They are 15,000. Equity shares are 15, they're worth 15,000. We don't have share premium, but we have retained earnings, 40,000. And remember these 15 and the 40,000 that I'm reading here, these are at reporting. So 15,000 equity shares, retained earnings at reporting 40,000. So I'm writing here, share capital at reporting 15,000, retained earnings at reporting they are 40,000. We don't have share premium dash there. All right. And then now you read the question. You read the question again. Read the question again. So when you read this question, what do we have here? When you read this question, what do we have here? They're telling us on 1st January 2021, Singapore company paid 90,000 for a controlling interest of 80% in Marina Bay company's equity. When they retained, look at retained earnings at acquisition. When the retained earnings of Marina Bay were 25,000. So retained earnings at acquisition, they are 25,000. Retained earnings here, retained earnings at acquisition, they are 25,000. And then retained earnings at reporting, they are 40,000. 40,000. 40,000. Don't write anything still. Don't write anything yet. Don't write anything yet. Don't write anything yet. Don't write anything yet. I'll be able to guide you. Now, from there, if you go down here, they are telling us something very important. At the date of acquisition, the fair value of NCI is what we call non-controlling interest. We are not yet there. We are not yet there. For consolidation purposes, at the date of acquisition, the fair value of non-depreciable land of Marina Bay Company exceeded its carrying value by 25,000. So when we were acquiring this subsidiary called Marina Bay, we called in a valuer who was able to revalue. And then they revalued some land, which of course is non-depreciable, upwards by 25,000. The valuation is what we call fair value adjustment. So remember, this was done at acquisition. So at acquisition, we have here 25,000. This fair value adjustment does not change. So fair value adjustment is the same at acquisition, is the same as fair value adjustment at reporting. So in this case, it will come and give us what they are, 25,000. So this fair value adjustment, normally they are the same. And then depreciation, of course, this land is not depreciable. Depreciation will be what they are, 0, 0. Because this is land. Land is never depreciated. So depreciation of fair value adjustment is 0. Now listen here. The share capital of a subsidiary doesn't change in between. So the share capital at reporting will always be the same as share capital at acquisition, 15,000. And then share premium has not been given in the question at all. So then that is okay. So using your calculator, is there somebody who can give me the totals here? Is there somebody who can give me the totals here? Is there somebody who can give me the totals? Using a calculator, not even Excel. Using a calculator, not even Excel. Not even Excel. Using a calculator, not even Excel. Not even Excel. So is there somebody who can answer Bernard? Is there somebody who can answer Bernard there? This is a BDA class because we don't answer them very fast. Of course, they will run away. They'll run away. So in this case here, the total is 65,000. 65,000. How about at reporting? At reporting, what do we have? At reporting, what do we have? At reporting, what do we have? 80,000. Now, on Skize, from acquisition to reporting, I can see there is growth. From acquisition to reporting, there is growth. So in this case, what I will do, I'll come and give them the growth. The growth in net assets, growth in net assets is what we call the post-acquisition, is what we call the post-acquisition profit, is what we call the post-acquisition profit, which is our PAP. So our PAP will be 80,000 minus 65,000. So could you kindly give me this answer? 80,000, don't write anything, don't write anything. 15,000, thank you very much. So this is 15,000. So this is basically the wealth that the subsidiary has generated since it was acquired. The wealth must be shared out between the two owners of this company. The owners of the company, so distribute this. So in this case, this is shared as follows, shared as follows, shared as follows, shared as follows, shared as follows. So we have here parent, the parent company. Parent company owns 80%. Parent company owns 80%, owns 80%. So 80% of 15,000. 80% of 15,000. So 80% of 15,000, what do we have here? 80% of 15,000, what do we have there? 80% of 15,000, what do we have there? 12,000. Now, I would want to see whether my students still remember this thing. If the parent owns 80%, there must be another owner. There must be another owner somewhere who owns 20%. This other owner will be called who? What is the name of this other owner? What is the name of this other owner? NCI. Thank you very much. NCI. NCI. This lady saying NIC, she must have been working at NIC. So parent company. So then we have non-controlling interest who has 20%, because they must be 100%. So 20% of 15,000. So 20% of 15,000, what do we have here, somebody? This must be 3,000. This must be 3,000 like that. This must be 3,000 like that. Yeah, noisemakers, or in this case here, LCI. Thank you so much. Now, I would want you guys to do me a favor. At this juncture, I would want somebody to unmute themselves, and then they try typing this. So everybody will be typing, but one person will be sharing their screen with us. One person will be sharing their screen with us as they copy these figures down in Excel, because I want us to do this in Excel. Yes, Lucy Macharia, it is in the syllabus. Just check your syllabus. I'll be able to show you. It is in the syllabus. It is in the, I can't teach you things which are not in the syllabus. It is in the syllabus. So then who is willing to share their screen with us as they just copy these things? And it doesn't have to be correct. I simply want you to copy down the assets of the subsidiary at acquisition and at reporting. So who is willing to really, please put up your hand. Please put up your hand if you're willing to share your screen with us. Anybody who is willing to share their screen with us? Anybody who is willing to share their screen with us? Leo wataka kuniongelesha sana. Oye, sijui kwa nini. Oye. Today they don't want to talk to me at all. On Excel, you're doing it on Excel. New Excel, yes. New Excel. New Excel. Oh. So Nancy Kimathi, thank you very much. So then I'll be able to unmute you. So please unmute yourself, and then you share your screen. And then as you thief your employer's time and ensure that you are doing this thing with Nancy. Nancy, I expect you to be typing, and then you talk to us. Please share your screen. Please share your screen. That tells me I need also my speakers here. Great. Nancy, you have unmuted yourself, but you're not sharing your screen. So perhaps Nancy has a problem. Terry, are you able to share them? Terry, try sharing yours. Thank you. And then you have to unmute yourself, because Terry, you must talk to us. So please share your screen. Yeah, you're sharing. So go to Excel. Go to Excel. Go to Excel. Take your time. I think you're not panic. The way you're moving your mouse, I can see it's like you're panicking. We are here the whole afternoon. No panicking at all. No panicking at all. Ila nitawapeleka mbio sana hii round, sababu nitakuwa na nyinyi hata mtashangaa sana. Just go. No. Click again. Click outside. Yeah, click back there. And then Terry, I'll teach you something. Before you start sharing your screen, you must always get the document that you would want to share. Always. Especially when you are doing like management meetings, workplace meetings. Before you start sharing your screen, you must always, in this case here, get the document you're supposed to share. That's when you start sharing your screen. Otherwise, one day Terry will share with us a love letter. At least Asia will forgive you. What about your employer or things you have been saying, or if you could even be doing some side work and your employer doesn't know, and then you share that work with them. Yeah. So say new very fast and maximize.
There will you?
Yeah, I can hear you very well.
Okay. So I should write whatever it is.
Yes, you are now teaching us. Basically, you are saying we are getting the net assets of the subsidiary, isn't it? So you create a column there for acquisition, you write in full at acquisition and at reporting. Yeah. I don't know why you have decided to skip J. If I were you, I would not have skipped J. You can remove it. Great. Of course, you'll make mistakes, spelling mistakes as you write these things here and there. Don't worry about those mistakes. Don't worry about those mistakes. Just continue. Depreciation of fair value adjustments. Great. Unfortunately, I'm the one who is doing the talking, and I thought you would do the talking for me. Remember, you first of all start by giving us the reporting figures. 25. Okay, Kabaga, I'll be able to do that. This question doesn't have share premium. Thank you very much. So retained earnings at reporting.
They were 25,000.
Are you sure? 25,000 was at, it's okay. Now 40,000, yes.
Yeah.
Fair value adjustment, we had land, isn't it?
Yeah, we said for the fair value adjustment, I'd still the same. Always
the same,
always
yes.
the same.
The same. At acquisition and at reporting, the same.
Yeah.
Yeah.
And the depreciation, we don't have it like.
Au kumepeleka kasa chini. Great.
This is
because
zero.
this is land, you can hear how the lady is explaining, right? So from there.
Here we take, we add this.
Yes.
Plus this.
Ayota kuchukua longer. What if the columns were, the cells were very many? Terry, there is a shortcut.
The sums.
At a sum itself is much better actually.
Sum.
Yeah. Terry, asante, lakini Terry kuna shortcut wewe Terry. Kuna shortcut. Like now for okay. Anyway, tumesema hakuna haja shortcut ama tuelewane. Kuna haja shortcut mingi kweli? Kuna haja shortcut ama tuende ki traditional way?
Traditional way.
Traditional way. Okay, then. So then go to the next one before I explain to the growth in terms of okay.
Now we want the growth in net asset.
Yes.
We just take the post acquisition profit. We minus.
Nope. Minus. Yeah.
We minus the
acquisition, net assets at acquisition, isn't it?
Yeah, and then we get 15,000.
Yes.
And then the share capital will also do it. Share as follows: the parents and the NCI.
Yeah. Now you share.
Okay. And so for the parent, it's gonna
parent
be
equals
0.8.
Yes. Times
15,000.
Thank you.
And then for the NCI,
like NCI, like what I'll do, I'll not even take 20%. I'll say equals. You pick that 15,000 up there minus the 12,000, isn't it? Because you know the two must add up to 15, isn't it?
Yeah.
Asante sana Terry for your confidence. So shortcuts, of course, are key. They are key. Thank you so much. So if you give me 1 minute, so stop sharing, Terry. And unfortunately, I'll have to mute you from my side. We shall overcome. Okay, great. Now, please see this. According to some, Mr. Kabage wanted to know something to do with, was it the revaluation, the fair value adjustment? Let me just check again. Fair value adjustment at reporting, how we know it's 25,000. Very good. This fair value adjustment, the fair value adjustment, we brought in a valuer who was able to revalue this asset upwards for 25,000 at acquisition. One thing you're supposed to know is that fair value adjustment, the one that you have here, will always be the same as the value that you have here. Kabage. The two, just like share capital, they must always be the same. They must always be the same. And because this was land, then depreciation for land is always what is zero, like that. Zero. Okay. So then before I continue, do we have everybody having this particular thing in the Excel? Do you have this key thing in your Excel before we continue? What are we covering? Please be helping Mwalimu to answer some of these questions. So Wanjiro Wamwai, quite a good name, very good name, Wanjiro Wamwai. We are doing group consolidation, but using Excel. There are only 7 people who have said yes, only 7. Thank you very much. Sina question. Paul Macau nimetuma link. Kuna link nimetuma. Somebody should be able to help me do that. Please share the question kwa WhatsApp before tuendelee, so that the other students can come up to speed to where we are. Please share kwa WhatsApp. Prudence, thanks. Share kwa WhatsApp. So has it been shared on WhatsApp now? Ah, Leah Simon, the lady from Mombasa. Has it been shared on WhatsApp now? That article, it's an article actually. Yes, thank you very much. Now, from now henceforth, everybody is writing whatever we write here in Excel. Whatever we write here, we shall write in Excel. Thanks, Leah. Now, after this, the next working that I will do after this is the NCI working. The next working, you skip like 2 lines there in Excel. You go to the NCI at reporting. You mention there NCI at reporting. NCI at reporting. NCI at reporting. Non-controlling interest. Non-controlling interest, NCI at reporting. At reporting. How do we do this? We shall simply take NCI at acquisition. NCI at acquisition. When we were acquiring this subsidiary, NCI figure at acquisition will always be given at that date. When we were acquiring this subsidiary, NCI at acquisition, NCI at acquisition, NCI at acquisition, it's here. NCI at acquisition, it's here. We are told at the date of acquisition, the fair value of the NCI was 20,000. 20,000. So NCI at acquisition, in this case here, is 20,000, like that. So you come and add share of PAP. Share of PAP. Do you remember the PAP figure for NCI? Is there anybody who is able to remember the PAP figure for NCI? Is there anybody who is able to remember the PAP figure for NCI? 3,000, isn't it? Now listen, remember this 3,000 figure is somewhere. There is a cell which has this 3,000. There is a cell which has this 3,000. So I don't need to come and start writing 3,000 here from scratch. What I'll do in this cell, I'll simply come and put equals here. Once I put equals here, I'll go and highlight this cell and then I say enter. And then the 3,000 will be transferred. The 3,000 will be transferred. So when I pick, in this case here, I say equals here, I hit this, then straight away, I should be able to get the 3,000 there. Or if I do not know that approach, I can simply come and write, it doesn't break anybody's bone. I can simply come and say there, 3,000, like that. Right? And then now what I will do, I will come and say that this is what here, somebody, this is 23,000 total. So remember, you're using Excel to get this 23,000. Right? You simply say equals sum, or use the alt equals, those shortcuts, alt equals. Then you say enter, like that. Then you say enter, 23,000, like that. So this is NCI at reporting. NCI at reporting. NCI at reporting. So this is a very important step. If you are through with it, could you kindly put thumbs up? Ted, you can't see my Excel today. Today I'm not using Excel at all, because really now the ball has shifted from me to you. It's about how you guys, do it in Excel. As we have now graduated. Right? Prudence says, thank you. Thank you. Prudence says like that. Then come and give us what we call the groups retained earnings. The groups retained earnings. The groups retained earnings. The groups retained earnings. So remember, if you are writing this as a title, you must know how to put it in bold. This is your title. So when the cursor is still here, you simply say control bold. For this group retained is your title. Title, you must know how to differentiate between titles and the normal write-ups. Right? Can't see the NCI at acquisition, Aisha. It is here. NCI at acquisition, we're told. Thanks for asking. We are told at date of acquisition, the fair value of the NCI is 20,000. Is 20,000. I hope now you have seen it, Aisha. I hope, Aisha, you have seen it. Great. So then we come here, and there is one danger that I'm seeing. I'm seeing one danger. So many of you have just joined us, and I've tackled quite a lot from the beginning. What I would suggest, if you feel the heat, that you're not able to follow very well, I would suggest that you drop out instead of wasting time, and then you can now get time to watch this video later. So you can hang on, but you do feel that really you're not following anything at all, don't start blaming yourself, just drop out. And then later when you get the video, you should be able to watch, and then we can always do a recap. Otherwise, you're free to remain. But I'm looking at a situation where somebody can remain here for the like 1.5 hours without understanding anything. Totally, itakuwa makosa. Great. So groups retained earnings. Now you come and give us here the parents retained earnings. So are you able to see the parents retained earnings? The parent is called Singapore. The parent is called Singapore. The parent is called Singapore. You can see the parent here. The parent, Singapore. Singapore has what retained earnings? 100,000. 100,000. So retained earnings of the parent, we have 100,000. The parent. But this parent, in the year, it has gotten a contribution from the subsidiary. It has gotten a contribution from the subsidiary. So you'll come and they say, add share of POP. Add share of POP. If you remember that cell where you had the POP, the post-acquisition profit, you'll simply come and add it there, 12,000, 12,000, 12,000. So then could you kindly come and meaning of a share of POP, post-acquisition profit faith, post-acquisition profit faith. So then this gives us 100 what year? 112,000. So this is the group's retained earnings. Group retained earnings at reporting. At reporting. So the last step. Now we are on the last step, post-acquisition profit. Yes. Now we are on the last step. The last step is for you to compute goodwill. You compute goodwill. So I'm so sure it's not quite nice for you. It's not quite soft for you. But the thing is, have we been able to type up to where we are? Have we been able to type up to where we are? Have we been able to type up to where we are? Have we been able to type? Okay, great. Now we do the last step, which is what here? Goodwill calculation. So come and give us the last step before you consolidate. Come and give us the goodwill calculation. So calculate goodwill. Goodwill of subsidiary. Goodwill of subsidiary. So goodwill of subsidiary, you start with the consideration paid by the parent. The consideration paid by the parent. Is there anybody who is able to give me this figure? Consideration that was paid by the parent. Lillian, sorry. So somebody maybe should be able to share with Lillian that working. There must be somebody who has written this something very well, somewhere there nicely. But I'm so sorry, Lillian, I'm so sorry. So Kevin tells me that the parent paid 90,000. If you remember here, the parent paid 90,000. The parent Singapore paid 90,000, like that. Thank you. So the parent paid 90,000. The parent paid 90,000. But remember, the parent is not the only owner. We have another owner who paid in something. We have NCI at acquisition. So we have NCI at acquisition. So NCI at acquisition, somebody who is able to remember NCI at acquisition, Aisha? Are you able to remember the NCI when we were acquiring? They also put in some value there. We also put in some value there. 25,000, no. Thanks for trying, but no. NCI at acquisition, if you remember Mudhoni, it was 20,000. It was 20,000. It was 20,000. 20,000. It was 20,000. Do you remember that figure? 20,000? Thanks, Aisha. 20,000. It was 20,000. So those are the two acquirers. One took out 80%, another one took out 20%. So great, thank you very much. So in this case here, this is the total consideration. The total consideration. So this is the total consideration, which is 110,000. So then you will come here and less the net assets of subsidiary at acquisition. You less the net assets of the subsidiary at acquisition. The net assets of the subsidiary at acquisition, it was 65,000. Net assets of the subsidiary at acquisition, it was 65,000. So remember, you don't need to keep on typing these things. Like when you see a figure of interest, you simply say equals, you pull this there. But before you get used, and because I don't want anybody really to be anxious, you can type as much as you wish. But maybe when we get to now the machine, I would expect in this case here, somebody like Kabaga to volunteer like in the evening, show people how to do this thing very fast, very fast. So then what we have here, somebody as goodwill. So this will be called goodwill at acquisition. So goodwill at acquisition will be 110,000 minus this 65,000, which gives me how much here, somebody? Which gives me 45,000. Thank you very much. 45,000. 45,000. Goodwill, just like any asset, just like yourselves. Right now, as you walk outside there, we are walking with our back straight, head high, because you're still young. By the time you hit age 70, trust you me, I need to change battery. Franco. But whether you like it or not, assets, including yourselves, because I'm so sure you are assets at your workplaces, assets in your families, etc. Whether you like it or not, I'm so sure right now, Peter Moura, you're walking straight, young man, handsome man, walking straight. There must be a lady here walking straight, beautiful lady, right? But the moment you hit 70, whether you like it or not, you'll bend somehow. Hakutakuwa na kuslay at the age of 70. And that is why if you look at pension towers, you know pension towers, which is at where Kare is, near Kare of CBK, pension towers. If you look at the inspiration, those towers, there are two towers, they are bending. The inspiration there is that according to CBK pension, the inspiration there is that you need to start saving today when you are walking upright. Because when you reach age 60, 70, whether you like it or not, the energy that you'll be having will not be as high as the energy that you have today. You'll be bending. And I like those towers very well. I like those two towers whenever I pass there and when I read the history, the inspiration which the architect had. So we have the pension tower, one is leaning like this, and the other one is bending like that. So here, basically, this guy was looking at a couple. This couple today, you are walking the same path. You're saying we invest like this. By the time you hit 70, a bigger percentage of couples at that age, they'll tend to be talking different things. At this age of 70, the father will always be seen as a failure in life. So you are bending this way, the mother is bending the other way. So the question is, when you're bending separate like that, will you be able to sustain yourself at that old age? Very important. So an asset, in this case, ladies and gentlemen, will depreciate. So even yourself will depreciate. Depreciation of an asset called goodwill, we normally call it what here? Impairment. So in this case here, come and less what here? Less impairment loss. You less impairment loss. In this question, there is no impairment loss. 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 So then come and give us what we call the goodwill. Give us the goodwill at reporting. which will be the same 45,000. So let me know whether we are together in terms of what year write up. In terms of write up, have you been able to write up to where we are? Have they been able to write up to where we are? The question doesn't have any policy for impairment. The next question which I'll be doing, it has impairment. I'm just preparing you for the next question. Great. Now from there, then we come and consolidate. So we go ahead and do what here? The consolidation. Consolidation is all about adding. It's all about putting things together. It's all about putting things together. So now we are doing consolidation. So tell us there, Singapore Group, the group is owned by the name of the parent. So Singapore Group, consolidated statement of financial position or balance sheet. Balance sheet. So we start with assets. And assets, we normally start with non-current assets. Non-current assets. So you basically follow whatever you have. You basically follow whatever you have here. These are the non-current assets. You see, the first non-current asset is what we call a subsidiary. So an investment in Marina is our subsidiary. You see, a subsidiary is yourself. In group accounting, there is no difference between parent and subsidiary. So there is no way you can tell us that you have invested in yourself. You can't invest in yourself. Whenever you see investment in a subsidiary, that one is only, when you invest in yourself, you can only grow your value. So you can only enjoy goodwill, which comes as a result of investing in yourself. So investment in a subsidiary will always be replaced with goodwill. So investment in subsidiary will always be replaced with goodwill. And the goodwill, you guys have given me a figure of 45,000. So investment in a subsidiary is yourself. Remember, a parent, just like, for example, assuming my son would want to do CPA, which they are telling me they would not want to do at all. Even my daughter tells me they don't want to do CPA at all. But I suppose it's because they are young, right? Because, I mean, who will take over this business of mine when I become old? I would want somebody here to do CPA a little bit, and they become good teachers. Otherwise, I'll not be having anybody to bequeath this thing to. But of course, children, you allow them to follow their passions. So if, for example, my son was to start doing CPA, will I charge him fees really if he joins RCM online college? No. The only thing that will happen is that if he succeeds very well and perhaps takes over this business, when I'll be an old man, assuming we bend together with him in the same way, when I'm bending, we'll be aligned. Then he can be assisting me, so I can be enjoying goodwill. So any investment that you do in your subsidiary, you can never capture it here. That is, an investment within the group. So the only thing you can do is to replace it with goodwill. We shall overcome goodwill. So from there, come and give us PPE. Come and give us PPE. Give us PPE. So, Evelyn, I will take a screenshot of that advice. I'll take a screenshot of that advice and I'll take it somewhere. Don't worry. PPE. So PPE, I'm consolidating. I can see there is PPE of Singapore of 30,000 and Singapore and the Marine 30. So consolidation is about adding together. So you take 30,000. So 30,000. So 30,000 plus 30,000. So we have here 30,000 plus 30,000. I would want to see whether there is anybody who is able to remember something here. Is there anything else, do you think, will we add to this? Is there anything, do you think, we shall add to this? There was some revaluation, isn't it? There was some revaluation. There was some revaluation. Fair value adjustment, isn't it? There was a revaluation of 20,000. Was it 20 or 25,000? Was it 20 or 25,000? The evaluation was 25,000. So in this case here, plus 25,000. You see, so in Excel, in this particular cell that you have here you'll come and say equals, you pick this 30,000, you say plus, just inside there, plus 30,000 plus 25,000. In this cell now, you'll be able to get the total automatically. In this cell, so you say equals, and then you write here 30,000 inside, plus 30,000 plus 25,000. If you have these figures elsewhere, because you see, you will be given Excel statements. You can go to those Excel statements you are given, you pick it by placing your cursor after you've said equals. You pick it, you say plus another one, you pick like that. So then what total are we getting somebody here? What total are we getting somebody here? What total are we getting somebody here? Kabaga is asking a very good question, and it's because I know he's a practitioner, that he should be organizing these things in terms of water liquidity. Yes, that is in practice, but in CPA, hata ukianza na liabilities zuko juu, utapatiwa correct. CPA, we don't care really. Don't care. What we want are the correct, the entries to be correct. The entries to be correct. Okay, so 85,000. Thank you so much. Now, after that, ladies and gentlemen, I would want us to come here and look for other assets. So if you look at this thing very well, so now we don't have anything here. We don't have anything here. So we go to the current assets. So current assets, what do we have? So we have current assets. I can actually even copy them down very first. Current assets. We have in this case here current assets. I'll simply go to my box here. I'll make adjustments later. I'll go to my box here, current assets. I'll go to my box here. I'll go to my box here. I say equals. I can see current assets. I'll make adjustments later. So I can see current assets. What do we have here? And I can see 30,000 and 30,000. So I'll say equals, and then I say 30,000 plus 30,000. And then I say equals. I'll be making adjustments later, but just say like that. Equals 30,000 plus 30,000. So is there somebody who is getting 60,000 for now? Is there somebody who is getting 60,000 for now? Is there somebody who is getting 60,000 for now inside there? They're not talking to me. I don't know why. Because you're consolidating. You're consolidating. We'll be making adjustments later. I know what you guys are thinking about, but there is no problem. We shall be adjusting later. So after that, now we go to the next item. The next stuff here is called equity and liabilities. So then we have here, so sorry, give me just some line, or rather just continue. Just continue, we'll be able to create other rows later. So give us equity and liabilities. So equity and liabilities, we are starting with the ordinary share capital. So ordinary share capital, what are we taking here, somebody? Ordinary share capital, what are we taking here, somebody? Ordinary share capital, what are we taking here? Remember, for ordinary share capital, we only take the one of the parent. Ordinary share capital, we only take the parent's figure. We don't take the subsidiary figure. So ordinary share capital, we only, the same case with share premium. We pick the ones for the parent. Don't ask me why. We pick the one. I can see already these guys know. Kumbe mnajua. So in this case here, ordinary share capital, I'll only come here and pick the one of who? Ordinary share capital, I'll come and pick the one of the parent, which is 25,000. So ordinary share capital, I wish I had this in Excel up there. So I'll go there, say equals here, and then I say equals, I go and highlight that 25,000, I say pop, it comes inside here automatically, 25,000. That's ordinary share capital. Now from there, we are looking at, after ordinary share capital, we have retained earnings. So retained earnings, is there anybody who can remember the figure that we're going to place here really? Is there anybody who is able to remember the figure we are going to put here? Remember, this is the group's retained earnings. We had this working somewhere. If I were you, I would just come here, this cell here, say equals, and go to this cell that are 25,000. Go to this cell. Was it 25 or 120 or 112? Group retained earnings. The group retained earnings, 112,000, isn't it? 100. So I'll go to the 112. I hit it here very fast. 112,000, like that. Paul Macau is at 25,000. I hope you're able to see there is a place where we calculated the group, not the one at, the one you guys are picking is retained earnings for the subsidiary. And yet here we are doing group accounts. I hope you're able to see this figure of 112,000, Paul Macau. We even gave it a big title. You actually even made it bold. Group retained earnings. You actually made it bold. Bold. You actually made it bold. 112,000, 112,000, 112,000, 112,000, 112,000. Thank you. Thank you. But Paul, you are here to confirm whether you're able to see that 112,000. I don't know why you're not confirming or mentioning something there. I'm okay. Thank you very much. Now, is there any other equity component? Is there any other equity component apart from these two? Thank you so much, Mudhoni. These guys have given us their own money on a permanent basis. They can never withdraw. So NCI, they are financial as well. So come and give us NCI. So is there anybody who can be remembering what NCI? Thank you, Terry. Yes. Thank you, Terry. Yes. So is there anybody who is able to remember this NCI at reporting? We did a calculation for it. NCI at reporting. NCI at reporting. NCI at reporting. 23,000, right? So NCI at reporting is 23,000. NCI at reporting is 20. So that is it. Then go to the liabilities. So liabilities, always you start with non-current liabilities. So start with non-current liabilities. Do we have them really? Start with non-current liabilities. So start with non-current liabilities. Do we have them really? Non-current liabilities, do we have them really? So non-current liabilities, you can see, we don't have them. Non-current liabilities, we don't have them. They have simply put everything together, liabilities, 25,000 plus 5,000. So then what I'll do, I will come here and rub this. So basically rub this, everything, and then call them what here, somebody? Just liabilities. Liabilities. So liabilities. So liabilities, what do I have? I'll come here and pick equals, say 25,000 plus 5,000 plus 5,000 plus 5,000. Then you say equals. Because we are consolidating, we are putting things together. 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 25,000 plus 5,000. Great. So we are getting what figure here, somebody? We are getting 30,000 here. We are getting 30,000 here. We are getting 30,000 there. We are getting 30,000 there. We are getting 30,000 there. So then, ladies and gentlemen, after that, I will come back here and read, of course, here, I've used this, I've used this. But if you look at note 3, at the reporting date, Singapore company is owed 5,000 by Marina Bay Company. So Singapore and the Marina Bay are one and the same thing, just like departments of the same organization. So if one department really borrows money from another department of the same organization, there's no way we'll be able to keep in our books like we owe each other. This is the same organization. It is the same group. And the example that I normally give my students, it's like this. Assuming, for example, my dear wife, today in the morning, called me Mwalimu, I'm in need of 100,000. Please give me 100,000, then I will refund. So if I have the money, of course, I would give her. So do you think it will be fair for me to keep on reminding this lady that, hey, I want back my 100,000? Will I ever get this money back? Be very honest, ladies. Be very honest. Please be very honest. Be very honest. Do you think I will ever? Yeah, not at all. Atakwambia kiendacho kwa mganga akiru, and that is how it's supposed to be really in marriage. Because marriage, the two of you are the same thing. The two of you are the same thing. So then if you are the same thing, there is no way Aura here will be saying, I expect to receive 100,000 from my dear wife Naomi. No, no. And then on the other side of the coin, Naomi is saying, I have a payable to my husband. No, then those things need to be cancelled. That 5,000 must be cancelled from receivables and from payables. So, but now remember, we don't have receivables here, we don't have payables, but we know where they are found in our accounts, in our chart of accounts. We know that receivables are found under these current assets. So it means you must come and bring your CASA here and ensure that your formula, put your CASA here, where you are at the 60,000. There's an adjustment I want to make. There's an adjustment I want to make. So put your CASA there. After you put your CASA there, if you want to see this formula, which was used to get this 60,000, which one should I? Which key should I? Which key should I, in this case here, which key should I, in this case here, press? You want to see the formula. You want to see what the addition, F2, isn't it? So you press F2. So when you press F2, now you'll be able to see what you added. It will come back to 30,000 plus 30,000 plus 30,000. And then now you can say there is a fake receivable. You say minus 5,000. It's a fake receivable. It's a fake receivable. As a husband, I have to really write off that money. I will never get back this money. And if I try following it from this lady here who is my wife, then automatically I will be a narcissist. A husband, I mean, you should never, that's very bad. That's very bad. Where you keep on reminding you, you owe me this. Hiyo ndio yule pastor tunamnanga yule pastor Ezekiel anasema wewe hauna nyota ya ndoa. Hiyo ndio sasa anasema namna hiyo hauna nyota ya ndoa because unataka problems. Unataka problems. If you're not ready to marry, you should not have married. All right? So please come and do the same. You see, there is this also lady who is trying to put a payable. You know now the payables will be under liabilities, eh? There is this lady here called Naomi from wherever she is saying, I owe my husband. But she knows well within her heart, she'll never pay that money. So then why don't you go out of your way and write it down? It's a fake payable. It's a fake payable. So please come here and say F2. Come and say F2 there. And then you should be able to say minus what here? Minus 5,000 there. Minus 5,000. So you cancel this from your payables and from your receivables. Both ways like that. Both ways. And if you're not able to remember F2, it doesn't, you should not really struggle with this thing, ladies and gentlemen. No. If you're not able to remember this F2, you can even come and just put your cursor there and then you start typing afresh. You can write down whatever numbers you want to subtract. You write them down in your paper there. And then, of course, you subtract them the normal way. I'll not kill myself. So in this case, then we should be able to have 25,000. And that now marks the end of this. This, I suppose, is 55,000. So could you kindly give me the total assets here? Give me the total assets there. Give me the total equity and liabilities here. Total equity and liabilities. Now, assuming I want to add a fresh row here in between, how do I add a fresh row? How do I add, assuming you don't have a row for total assets? How will I be able to add? How will I be able to add a fresh row, a new row? How will I be able to add a new row? Control plus, isn't it? You simply come to a row down here. Yeah, you highlight the whole of this and then you say control plus. A new row comes. Thank you very much. So they're telling me this is 185,000. And if we are correct, then the total equity and liabilities should also be 185,000 like that. Should also be 185,000 like that. Should be 185,000 like that. So is yours balancing really? Are they balancing? They are balancing. Because they are balancing. Great. They are balancing. Now, I want us to look at some question here. They are balancing. Maybe you can share those Excels. Kabage, you can share those Excels between yourselves. It's balancing, trust you me. It's balancing. So then I would want us now to go a notch higher. And this is what I'm thinking. So I would want us to do a group cash flow question, which has got all these steps. So we look at cash flow, because cash flow, whether you like it or not, it has to be in your exam. What we don't know is whether it will be a normal company cash flow or a group cash flow. To be on the safer side, let's do a group cash flow. Of course, the moment you understand a group cash flow, the other one is automatic. So that unless there is a question, please allow me straight away without taking a break, we go to the group cash flow. Is that okay? Great. Then I'm so sure that most of you did this question, this sitting. Most of you must have done your AFR in August 2022. Most of you. So I would want to do the question that you did in August 2022. We solve it. But now this time around, using what here? Using Excel. We solve it this time around using what here? Excel. We solve that question using Excel. So, and I will be able to do the whole of it really myself. I'll be able to do, no. If I do it the whole of it myself, you don't understand. It's August 2022, sorry, August 2022. Most of you must have done the August 2022 paper. So I've sent the question there, and I would want us to go straight away. I would want, oh, which one have I shared really? No, I've shared the wrong one. I've shared financial management instead of financial reporting. Sorry. I've shared the wrong one. Okay, so now it is in your WhatsApp. Please download the paper, download that paper, and then we start working on it. Once you download the paper, let me know that already you have it. Let me know that already you have it. Great. So have you got that paper, ladies and gentlemen? Have you gotten the paper? Have you been able to download it? Imagine they're not talking to me. They're not seeing the paper. Thank you, Ruth. At least Ruth has been able to download it. Thank you very much. So then I shall read this question. I shall read this question very nicely and pretty fast. This is how it reads. We are told the W Group has owned a number of subsidiaries for several years. The following information relates to the financial statements of the group. Statement of financial position as at 31st March. Remember, if it is a group cash flow, or rather any other type of cash flow, balance sheets, they must give you two balance sheets. So you have the balance sheet for 2022 and the balance sheet for 2021. But profit and loss can only be given for 1 year, which is the most current year. Look at the additional information. Wanasema during the year ended 31st March 2022, W Group disposed of its entire 80% shareholding in C Limited for cash. The shares had been acquired on 1st October 2017 for a cash consideration of shillings 1056 million, when the fair value of the net assets of C Limited was 980 million. The fair value of NCI interest at acquisition was 224. You see, already they have given you the net assets of the subsidiary C. This is an examiner who is willing to assist you. He does not want you to do that table of net assets at acquisition. No, he doesn't want you to do that. Goodwill calculated under the full fair value method was tested annually for impairment. At 31st March 2021, goodwill relating to C Limited had been impaired by 75%. A goodwill impairment charge has been included within administrative expenses for the current year, but does not relate to C Limited. Ladies and gentlemen, somebody told me something very nice about these cash flows, and I've never forgotten that gentleman. Up to date, about 19. We shall overcome. Great. That when you are told, in this case here, a subsidiary was acquired during the year, or a subsidiary was disposed during the year, the first thing you need to do is to calculate the goodwill. You calculate the goodwill of those subsidiaries. So here we have a subsidiary called C that was disposed in the year. So then the first thing we need to do is to calculate the goodwill of that subsidiary. So mention there, goodwill of subsidiary C. Question number 5, yes. Question number 5, thank you, Susan. Question number 5. So we shall calculate goodwill of the subsidiary that was disposed. Goodwill of the subsidiary that was disposed. And goodwill really is a nonsense thing. Anybody will be able to calculate goodwill. Anybody. Right? So for this goodwill of C, disposed subsidiary. Please, I'm so sure out of the 84 students who are in this room, there must be somebody who is writing notes on their book. That will be the most unfortunate thing. All of us are trying to write everything in Excel. It's only Mwalimu who is lazy today, who is writing on the board. Otherwise, you guys are writing, because I would want to train you really to write these things in Excel. Me, I'm not going to do an exam. Write them in Excel. Nobody is writing on any exercise book. Nobody. So goodwill of C, disposed subsidiary. So how do we get goodwill? I will look at the consideration paid by the parent. Consideration paid by the parent. So the parent company, you can't see my board. Are you able to see my board, ladies and gentlemen? Are you able to see my board? So Ted, I don't know really what is happening with Ted. Consideration paid by the parent. So from this question number 5, as regards company C, which was disposed, have they told us how much the parent paid? Have they told us how much the parent paid? From that note number 1, have they told us how much the parent paid? Who are these who are very tired? Perhaps they never took lunch. Now they are crying internally. They are not even following the question, because note number 1 is very clear. Very clear. It's very clear that the shares had been acquired a long time ago for a cash consideration of 1056. Are you able to see that amount? 1056. Thank you very much. So 1056, like that. And then, ladies and gentlemen, you must come and give us NCI, because we never acquired 100%. We had 80%. There was another acquirer as well, although with a smaller percentage. So NCI at acquisition. So remember, this is the same as what your fair value of NCI at acquisition. How much they pay themselves? What was the market value of the shares there? What was the market value of the shares? Market value of the shares. No, David, you're panicking for nothing. You're panicking for nothing. You're panicking for nothing. They'll be in your exams. And we have a lot of time, really. Right? So in this case here, NCI, the fair value of NCI at acquisition is 224. 224. 224. So then what is the total consideration? 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 Please add the 2. Please add the 2. Please add the 2. So in this case, it is 1280. And I would want to hear more answers coming from David, who is panicking. 1280. 1280. So 1280. Thank you very much. David will pass. So then come and what do we deduct here to be able to get goodwill? What should I deduct here to be able to get goodwill? What do I deduct here to be able to get goodwill? What do I deduct here? Impairment, we haven't reached there yet and see, but thank you very much because I can see you're really struggling to understand this. Net assets, yes. You less net assets, net assets of the subsidiary at acquisition. So the net assets of the subsidiary at acquisition, the net assets of the subsidiary at acquisition. So the net assets of the subsidiary at acquisition, is there anybody who is able to see those net assets really of this subsidiary at acquisition? Of this subsidiary at acquisition. Net assets at acquisition, what do we have there, somebody? 980. David, I can't see you yet. David, my young boy, not boy, but son. 980, I can't see you at all. Less net assets at acquisition, 980. So you subtract here, whatever you get will be goodwill. Goodwill at acquisition. So are you able to get this figure? Are you able to get this figure? So they're telling me it is 300. I'm here to see David totally. Mark you. This thing is very important and you'll be able to get most of your marks here. So goodwill at acquisition is 300. So in this question, do we have any impairment loss? 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 Have they given us a percentage? What percentage have they given us there? What percentage have they given us there? 75%. So impairment loss is 75%. 75%, 300 of 300. So 75% of 300 gives us what figure? Somebody here. 0.75 times 300 gives us what figure? Somebody here. 75% of 300 gives me what figure? Somebody here. 75% of 300. 75% of 300 will give me how much? So the impairment loss is 225. And then now you'll be able to give me the goodwill. It can't be goodwill at reporting because this thing was disposed. They can only be called goodwill at disposal. So it can only be called goodwill at a disposal. So how much do we have here as goodwill at disposal? This minus this is 75. So this is the goodwill that was disposed with this subsidiary. This is the goodwill that was disposed with this subsidiary. So once I've gotten this goodwill that was disposed, ladies and gentlemen, I'm halfway of my problems. Trust you me. So then I'll be able to go and read down the requirement. The requirement, they want us to give them cash flow statement. Cash flow statement. So I want to believe that you guys are very good with cash flows, isn't it? Are we good with cash flow? Are we good with the cash flow? Are we good with the cash flow? Somehow, are we good with the cash flow statement? Somehow, Paul says yes. I mean, being good doesn't mean that you must get everything. At least out of 20 marks, you can get even 10. Margaret says, no, it's good to be honest. Not Excel cash flow. It's good to be honest. Yeah, we shall overcome. We shall. But Terry, akuna Excel cash flow na ingine. It's not the same. Not the same. It's only that you are writing this thing in Excel. It's not the same. Excel is faster. Excel is much faster. Excel is much faster. So then what we shall do, we shall come straight away because they have told us to do Excel. I shall come straight away here and write for them the name. The name here, the name of this company. They have given us the name of the company. It is W Group. Statement of cash flows. Statement of group cash flows. Statement of group cash flows, blah, 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 blah. And then you bolden this. You bolden it nicely, like that. You bolden nicely. And then what do? You come here, and always we start, remember, there are three things. There are three things, remember, there are three things. There are three things. We normally start three activities. We normally start with operating activities. Operating activities. We have, in this case here, investing activities. And then lastly, we have what we call financing activities. Financing activities. In Excel, you squeeze them somewhere there in case you need more rows. Remember, you're writing this down there. In case you need more rows, you'll be able to add. Operating activities are those activities that generate something to your profitability. Something to your profitability. Okay. So under operating activities, I told you what you are supposed to start with. So you start with profit before tax. Profit before tax. Always you start with profit before tax. Right? And then you come and make your adjustments. You say adjusted for, you say dial God's number. You dial God's number for food. You dial God's number for food. Otherwise, you rest in peace. Otherwise, you rest in peace. Do you remember this thing? You dial God's number for food. But if you want food today, simply pick your phone like this, talk to your God, the Father. Is anybody who is able to remember this acronym? Today you guys are so quiet. I don't know why. You're so quiet. Dial God's number for food. There is another young man, yesterday I was teaching this thing to, was it this FR intermediate or FR advanced? This young man told me, Mwalimu, if you would want us to remember this thing very well, please don't use the word God here. But it should be dial. I don't know how he was putting it. Dial, I don't know whether it was girlfriend's number. No, there's a way this young was putting it in a very good way, but I seem not to remember very well. That you dial your girlfriend's number, and then you rest in peace. I'm trying to remember what he used for F. So you dial God's number. I would rather we go with this. You dial God's number for food. Otherwise, you rest in peace. You rest in peace. Oh, speed is a little high. Okay. Speed is a little high. I need to go a bit slow. Okay. Paddy, thank you very much for bringing that up. So then once you hit where I am, Paddy, please put a thumbs up. Put a thumbs up. But Paddy, you need to try also type quite fast because your exams, I'm telling you, they are speed tests. I even saw one day, Kabagi advising you the same. Kabagi told you, once you put your head down like this, you not even get a chance of looking up. You try looking up like this, the examiner tells you 2 minutes. Thank you. Okay. So then we know that this is depreciation. This is depreciation. This is impairment of goodwill. This is amortization. This is loss on disposal. Like I can see somebody has told us there. This is gain on disposal. We have here finance cost. Here we have receivable. Here we have, in this case, here inventory. Here we have what we call payable. Here we have the payable. So Paddy says good now. Please now finish again, typing this very fast. Remember, like now, the word receivable, you will not type it in your exam. Why? Because you have your balance sheet. You'll have your balance sheet up there, which has a name receivable in Excel. So you should be able to pick that word from there. You simply go to where you want to put it. I want to put this thing here. I'll simply come and say equals, and then I go to my balance sheet up there where I can see the word receivable. I put my cursor there, and then I say enter. Receivable comes down there. The same with the inventory. So I move very fast. I don't have to type anything, or rather, whatever that I have. Whatever that I have in my balance sheet, I should be able to bring it. Like the word finance cost, I'm so sure it's there. I should be able to bring it here down very fast. So sasa tuende polepole. Sasa unaenda polepole hapa, unaanza na mambo ni polepole. Another profit before tax. Is there anybody who is able to see the profit before tax in this question? Is there anybody who is able to see the profit before tax? Is there anybody who is able to see the profit before tax? I can see Sophie crying so much that now we have met FR again. Nope, no. This is the only stuff and the very simple stuff, and you'll be able to pass, trust you me. Because now here you are picking everything. Great. Uongo, uongo, uongo Kabage, uongo Nancy Kimathi, uongo Terry, uongo NC, uongo, 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 nini waongo, nini waongo, nini waongo, nini waongo. Wanasema profit before tax, umeangalia kwa income statement, wakasema profit before tax ni 1464, itakuwa unasema equals kwa hii seli yako, unasema 1464. You see, this 1464 is for, nataka kudanganya upate zero. This 1464 is for continuing operations. You can see up there. They have given you a title, continuing operations. But you see, you want profit for the entire group from the continuing and the discontinued operations. Whenever you sell a subsidiary, that subsidiary, the profit generated is your profit. So like now we have, if you read note number 5, actually note number 4. Note number 4, the loss for the period from discontinued operations in the consolidated statement of profit or loss and other comprehensive incomes relates to C Limited, which was disposed. And I can see C that was disposed has a profit before tax of 48. So remember, it has got to be profit for the whole operations, for the continuing and for the discontinued, because the discontinued, this C, which was sold, it left that profit for you. So in this case here, plus 48. Remember, you're putting equals here, isn't it? Equals this plus this. And then you give me an answer now. You give me an answer now. Come back, we shall overcome. I'm not worried myself. Why should you be worried? So the profit before tax, I'm being given a figure of 15 what here? 15, 12. 15, 12. 15, 12. So once you read the word continuing, so you should be able to know there is a discontinuing. Even when you are told that there was a disposal, you should be able to know that whenever there is a disposal, there must be a discontinued operation. Thank you very much. 15, 12. Now from there, now I'll be able to read very fast these things. Like now what I will do, I'll scan through my question. I'll scan through this thing. Look for any information about depreciation. Put it here. So like depreciation, have they told me anything to do with the depreciation? Have they told me anything to do? Look at, for example, note number 6. I've seen something very important. Note number 6, on 1st April 2021, W Limited commenced development expenditure on product Q. The product is expected to be launched in the year 2023. Shillings 56 million amortization on other intangible assets is included within. So I have amortization, a free mark. That's how they mark. 56. PBT, Terry, what have we done with PBT? We've taken the PBT for the continuing. I hope you're able to see PBT for the continuing. From the statement of P&L. Are you able to see the profit before tax? Terry, there as 1464. Are you able to see that 1464? Terry, are you able to see 1464 profit before tax? Yeah. So that is from the activities we shall be able to do what here to continue with. But remember, we sold a subsidiary. There is a discontinued operation. And this discontinued operation, in note number 4, what profit before tax are you able to see there for that discontinued operation? 30. Note number 4, are you able to see profit before tax? 48. And basically, group consolidation tells us for profitability, we work with both continuing and discontinued. So we added that 1464 plus 48. So I hope that is okay now. I hope that is okay now. I hope that is okay now. Great. And then we have, ladies and gentlemen, this lady called Nancy Kimathi tells me to pardon about amortization. You see, it has been given there in note number, amortization has been given in note number, amortization has been given in note number 7. Or rather, note number 6. Note number 6, last sentence. Note number 6, last sentence. You'll be able to see shillings 56 million amortization of other intangible assets. That's what you bring here, amortization 56. And then note number 7, they have given you depreciation. Note number 7, are you able to see the depreciation of note number 7? Note number 7, are you able to see the depreciation? I can see already Evelyn has a figure. Evelyn has a figure. She's telling me that depreciation is what here is 160. Depreciation is 160. Are you able to see that depreciation, ladies and gentlemen? All of you, please talk to me this afternoon. I'm almost finishing. 160. 160. The other one that I'll be able to pick very fast, a free mark there, is the finance cost. Is there anybody who is able to see finance cost of the group from? Finance cost of the group from? Finance cost of the group from the P&L. Finance cost from the P&L, from the profit and loss. How come it's only Aisha who is talking to me this afternoon? And I'm so sure Aisha, she must be fasting. That means that fasting is quite nice. 184. Finance cost. No. Finance cost. So the way we mark this thing, I'll even be able to share with you the marking scheme. You will see here, this. All these are what here? Marks coming on board. Marks coming on board without even you knowing what is happening. And then I'll be able to get like two marks now here. Here I'll be able to get so many marks. Like receivable. How do I get receivable? These are working capital changes. Opening minus closing. Remember, for receivable, we normally talk of opening minus what here? Closing. So please go to your receivables. Look for opening receivables. Is there anybody who is able to see the opening receivable? Opening receivable. Is there anybody who is able to see the opening receivable? Opening receivable. Opening receivable. Opening receivable. Remember, 2021 is the opening year. 2022 is the closing year. So 2021 opening year, abracadabra, receivable. Opening year, receivable, opening. Atamisi yoni vizuri. Opening. Go to current assets, receivable. I can see 832. So receivable here we have 832 opening, and then closing is 2022 receivable. 2022 receivable. I can see 900 what year? 920. And this is the concept that I wanted to sell to you here today. If you get this concept, then automatically you are a very good student. The other thing that brought a working capital change, the other thing that brought a working capital change is what here? Somebody is the subsidiary that we disposed. This subsidiary that we disposed. Had some receivable. The subsidiary that we disposed had some receivable. This subsidiary. No, I'm sharing something bad. If you look at note number, if you look at note number 3, the carrying values in the individual accounts of C Limited. C Limited is the one that we disposed, remember, is the one that we sold, remember, of C Limited. As at the date of disposal, they are listed below, and one of the items there is a trade receivable of 220. So that receivable went away. So you must come and say here, minus 200 what here? Whenever you dispose of subsidy, you must be very careful with that. And minus 220 went, that receivable went away. So then could you kindly give me this net figure? Give me the net figure here. If it's negative, we shall write it as negative. If it's negative, we shall write it as negative. If it's negative, we shall write it as negative. So Paul Macau says 308. So this is minus 308. So I would want you guys to do me a favor. I would want you guys to do, for you, you'll not have a working like this one. For you, this working will be done in this cell. This working will be done in this cell. If I would want to make reference to it later, I'll say F2. Could you then kindly give me the figure for inventory? If you're keenly following. If you're keenly following, could you kindly give me a figure for inventory? If you're keenly following, could you kindly give me a figure for inventory? Inventory using Excel. Inventory using Excel. inventory using Excel. Kevin Kabage gives me 72. Mulindi finally gives me 72. Very good. So Charity asks, how comes this finance cost is what here is positive and yet it has been given as what here negative? Remember the finance cost for this figure to be obtained, it was subtracted from whatever revenues. It was subtracted. I agree it was subtracted. But what are we doing here? We are adjusting to regularize things. That is why we are doing what here, somebody? That's why we are adding. That's why we are adding. Any, for example, losses, costs shall always be added. The only thing you will subtract here are things like gains. See, gain. But expenses, losses, etc., they are added back. Gains, profits, you subtract like that. Thank you so much. So is there anybody who is not getting 72? Is there anybody for inventory? For inventory, is there anybody who is not getting 72? They buy lunch for us. Is there anybody who's not getting 72? They buy lunch for us. Be very honest. I will not force you to buy lunch, but is there anybody who is not getting 72 for inventory? Terry has decided even to give a waki. Terry must be a very good girl. Very good girl. Great. So in this case here for inventory, so for inventory, what do we have there? Like Terry has told us, opening inventory is 1320. Closing inventory is 944, and then we did the sell. We did the sell. Prudence will come back to that. Now we are handling this. We'll come back to that. We'll come back to that. Now we are handling this. So now here, inventory of the C Limited, which was disposed, which is 304. So if you do it that way, then you'll be able to get that 72 like that. How about payable? Please give me a figure for payable. Now, Prudence Gaki, give me a figure for payable. Give me a figure for payable. Remember, for you, it's not about getting things correct. It's not about balancing. It's about many entries that will be correct. It's about many entries which will be correct. 24 negative. We have Evelyn, 40. So a lady and a gentleman who will be correct. Of course, ladies, whenever you're given a choice to, ladies must be correct. Ladies must be correct. So Kevin, I don't trust your figure very much. So remember, if you don't want problems, even the payables, just make them what here? Opening minus closing. But now for liabilities, to get the correct sign, you must always multiply them with minus what? Minus 1 to get the correct sign. Opening minus closing, as usual. So for payables, what is the opening balance? Can somebody give me the opening balance for payables? Opening is the payables for 2021. Opening is the payables for 2021. Opening is the payables for 2021. 2021. Are you sure? Are you sure? Opening 2021 in gap, opening alone. Opening payable. For 2021, opening alone, Terry, opening alone, 328. Minus, in this case here, closing for 2022. Closing for 2022. Closing for 2022. Closing payable 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 2022, 288. And then the payables of the subsidiary that was disposed, don't capture it as a negative. I know it's there negative. Negative means liability. But don't put it here as a negative, you'll confuse things. So the payable of the subsidiary that was disposed, are you able to see it somewhere? 80, yeah? 80. And then whatever I will get, I will come and multiply this with -1 because payable is a liability. Payable is a liability. Payable is a liability. Payable is a liability. Whatever I get there, I will remember to multiply with -1. -1. Noted, that one will easily confuse you. Now we have resorted to be working with this, and then we say times -1. Times -1. So the correct answer here is 40. The correct answer there 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 is 40. We shall always be working with these receivables, payables, using the same concept OC. However, for liabilities, we shall be multiplying with -1. With -1. Thank you so much. Now, from there, ladies and gentlemen, if I'm the one doing this, I will come straight away to, there are many things I can pick. If I'm the one doing this, if I'm the one doing this, there are so many things I'll do. I'll not even do the whole question. I'll do so many things correctly until the examiner wonders whether they are marking a script of a genius without knowing much really. Without knowing much really. Now, ladies and gentlemen, look at, for example, something like financing. So financed by, I'm looking at my capital structure. I'm looking at the share capital. When I look at the share capital financed by, you know, you don't have to really stick on one area looking for the, no. You're simply going for what we call low-hanging fruits. We are simply, there's nothing like a share of profit of associate. We haven't yet reached there. Why is it giving us negative 120 when we start from closing? Yeah, it's because of the signs. It's because of the signs, because of the signs. You don't remember now when you know, if it was like the simple question that we had like last semester, the one that was it last semester, where we don't have these issues to do with what year the subsidiary is being disposed. Then when you take closing, you'll be able to get answers very correct. But when you have subsidiaries being acquired and disposed, then you must always use this approach. Actually, I would want us from today, let us strictly be using this approach. It is OC, opening minus closing. But whenever we get, in this case here, liability, always remember to multiply this with negative what here? Negative 1. Something you just get used to. It is something you'll get used to, We wanted to also not teach this at all, but I attended some seminar where they said that anybody who is doing this BDA paper, BDA is all the concepts that you learned in CPA. Then I remembered very fast that if these guys would want to stretch your memories a little bit, it's just on this AFR, just something small here and there, and then you'll be at home. You'll be at home. Thank you very much, Faith. If, for example, like some of the questions you guys used to do, if, for example, we had a new subsidiary that was acquired in the year, then the assets would have been done what you would have added. If you acquired an asset that came with receivables, you would have added plus 3, whatever, plus 80. That's a good question. Great. Thank you so much. So now we are under financing activities. So under financing activities, we are looking at ordinary share capital. We are looking at any debentures that we have, debentures, etc., very easy. So if you look at the question that we have here, look at ordinary share capital and tell us whether we issued new shares. We issued new shares. When I look at this thing very well, and ordinary share capital, I can see at the beginning we had 800, at the end we had 800. 800. So we never raised anything with ordinary share capital. All right. So I can see you guys are asking very good questions, and maybe we're not in agreement on what Mwalimu wants to do. I simply want to teach you how to get the low-hanging fruits. Actually, I'll not even finish this question. I simply want us to harvest the low-hanging fruits. Because like when you talk of dividends, for example, I know dividends will come here. But how many of us will be able to get the dividends paid to, for example, NCIs are working, very few students. And if you try going that approach, then it will take more than 1.5 hours in this question. And that is not the idea. The idea is for you to harvest these low-hanging marks here and there. You survive. That's what we want. Or do you want to be perfect in this question? Is anybody who wants to be very perfect in doing this question? Anybody who wants to be very perfect in doing this question? I show you one of the shortest way of failing. If you want to be perfect, Joseph, in this question, trust you me. In BDA, there is nothing like perfection in a question. In BDA is more of a confidence exam. That's what we are told. Are these accountants confident? It's about harvesting many fruits, low-hanging fruits, and then you do what you survive. If you try being perfect in a question like this, you will take, you see, already since I started doing this question, more than 40 minutes are over. And I'm quite a fast teacher. So you only do a question up to the 40th minute maximum, and then you leave it hanging like that. You go to another question, you harvest many marks from there, you move on like that. That's how you'll be able to pass this paper. It's a speed test paper. It's a speed test paper. It's a speed test paper. It's low-hanging fruits. It's low-hanging fruits. It's low-hanging fruits here. It's low-hanging fruits. It's low-hanging fruits. Yeah, you can never be perfect. Kwa BDA. I wish the guys who did BDA last semester can tell you what happened. Most of them were not able to complete questions at all. Actually, I would want you to have even a session where you share experiences. Where you share experience. That's when you realize what Mwalimu is saying. Right? 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 But for example, when you are doing like the theory questions, if you go to number 2 and then you realize that you don't understand number 2 very well, what do? You can't skip. This is not that primary school multiple choice exam where you skip and then you come back to no. If you're not able to understand question 2 very well, guess. You say, for example, you can do the eliminations, you guess it's B, and then you go to question, because you will not get time to go back. You only get time to go back. You only get time to go back totally. So speed is of essence here. Leah is asking about tax and finance costs. Already have it here. You see, like now, taxation, of course, you'll be doing it later. But what I know, you'll never even get time to come and finish this thing. You'll not get time to finish this thing. Trust you me. There are things you'll be able to slot in very fast, and then you do what here, you move on. If you get time, of course, assuming, for example, but also perfection is good. Assuming, for example, you have gone to a BDA paper, and then you realize that this is the only question that you know in the entire exam. So you get that this is the only question that you know in the entire exam. Now you can now go back, you start, in this case, you're now filling up everything. But you see, in BDA, you'll be knowing all questions. The thing is, how do you run through them within the time? Thank you. Great. Pass mark is 50%, yes, 50%. Now, ladies and gentlemen, go to the debentures, So debentures, what do we have there for the debentures? For the debentures, what do we have there for the debentures? So debentures, in the balance sheet, I can see long-term loans. So opening balance is 960, closing balance is 688. That's a very straightforward, if you can remember from your FR. So 980, 960. 960 minus 688. And because it's a liability, multiply this with -1. It's a liability. It's a liability. So what are we getting somebody here? 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 Remember the subsidiary we sold there, 272. 272. Are you sure is it positive really? Is it positive? Because here we repaid. You can see at the beginning the debentures were worth more. At the end, the debentures are reduced. So it must be a negative cash flow. It's a negative cash flow. It's a negative cash flow. It's a negative cash flow. But the moment you have just written here times -1, then everything sorts out. You don't have to, like they used to teach you in AFR, but now this is towards, you don't have even to mention. You don't have to mention. Ordinary share capital. What have we said about ordinary share capital? You can see beginning is 800, end is 800. So there was nothing really that was there. Nothing changed there. Nothing changed. 800, 800. Then you're able to see 800 and the ordinary share capital, 800, 800. Great. Thank you so much, ladies and gentlemen, for today. I'll be able to finish up this question in our tomorrow's class. If possible, try giving it your best shot till the end, so that we can now compare notes in our tomorrow's what year